morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at now Canadian-based Sagicor Financial Company Limited, or Canadian listed rather, for its financial year ended 2020. Now, investors may recall that it was a little more than a year ago that Sagicor officially moved onto the Toronto Stock Exchange, and quite recently they were officially delisted on the Trinidad and Tobago Stock Exchange, but of course they would have been suspended from trading for quite some time now. Now, the company has had quite a tough time over the past couple months or year in terms of its performance, not surprisingly given the COVID-19 pandemic, but also in terms of its share price performance on the Toronto Stock Exchange. So we're going to take a little look at that today and consider what's in store for investors in the coming months and year ahead. So turning quickly to its earnings, well, the group would have recorded a fully diluted earnings per share in US dollars of 2 cents, which is in quite stark comparison to the 55 cents per share recorded in the fiscal 2019 period. That's roughly 104% decline. Total revenues positively were fairly stable, up just around 0.6% from 1.867 to 1.878 billion US dollars. And that was attributable to an increase in net premium revenues, increasing just around 13%, offset by a decline in investment income, however, leaving revenues fairly stable as mentioned. Total benefits and expenses did increase on a net basis, up around 4.4% from 1.7 billion to 1.78 billion. There was a share of operating losses from an associate, namely Playa Hotels Holding, leading to that share of operating gains or income falling from 3.3 million in fiscal 2019 to a loss of 35 million US in fiscal 2020. Ultimately, net losses attributable to equity holders did decline or come in at 3.6 million loss compared to the 44.5 million in income or profits attributable to shareholders in fiscal 2019. When we take a look at that regional revenue mixture again, overall, it was basically flat at 0.6% up. We see that there were some changes in terms of its regional contribution. The US, for example, which would have comprised around 57% of external revenues, actually improved around 16% in terms of total revenues, external revenues generated from 601 to 696 million. Jamaica, on the other hand, again, with some of that heavier exposure to its Playa holdings, the group's Playa holdings, would have declined in terms of total revenues from 657 to 576 million, roughly a 12% contraction. Trinidad and Tobago positively did increase. It accounts around 14% of overall group revenues on external revenues, and that would have increased around 6.8% from 239 to 256 million. And Barbados pretty much even Stevens at around 10% of external revenues. Other Caribbean also declining from 191 million to 165 million. When we take a look at segment profitability for Sagicor, well, there were some quite notable changes. Sagicor USA, despite generating significant revenue growth, it was more than offset by some increases in its total benefits and expenses, and that would have meant the profitability of the segment swung from a profit of 45 million in that pink color to a loss of 35 million in fiscal 2020. Sagicor Jamaica would have had a significant reduction in profits rather, from 164 million in fiscal 2019 to 78 million, so roughly a 50% decline there. And Sagicor Life would have had a more moderate decline in profits from 67 million US to just around 57. So not pretty reading right across the board. All of the segments of Sagicor would have declined over fiscal 2020. And that may or may not have been already reflected in its current share price. Now, since listing at its Canadian initial conversion price for investors or shareholders at Canadian $10 way back in December of 2019, which seems like ages ago now, the price has really struggled, and it hasn't really come to terms, or it hasn't recovered in line with other financial markets. And you can see, if you follow the red line, that it would have closed as of the end of last week at around just under the $6 Canadian mark, which is roughly a 40% decline since its initial debut post its acquisition and official listing on the Toronto Stock Exchange. Now, when we take a look at the effective TT dollar price for investors, well, pre-announcement of the Alignvest, now Sagicor Financial Company acquisition, the trading price of Sagicor on the Trinidad and Tobago Stock Exchange was around $7 TT. And the effective TT dollar price, when we take this Canadian price and convert it to its equivalent in terms of number of shares, pre-conversion is around $7.46. So investors have really not been made that much worse off, nor that much better off as of now. And of course, they would be keenly looking to see whether or not the share price does recover in the coming months. And there is a very good case for that happening. At the price of $5.95 Canadian, Sagicor is trading with a negative price earnings ratio and offering investors a quite healthy dividend yield of 4.8% compared to its sector Canadian peers of around 4.4%. So that's some good news there for Sagicor investors. And they have been quite disciplined in terms of their dividend payments, reassuringly for investors, even throughout the pandemic, whereas other companies would have been a little bit more conservative or opted to greatly reduce or even cut their total dividends over time. So with that vaccine rollout coming, that should lead to some measure of economic recovery in all of Sagicor's operating jurisdictions, notwithstanding that it may be a bit more sluggish, particularly in the Caribbean region. There has been some early reports of hesitancy to adopt the vaccine or get vaccinated. Hopefully, good sense prevails and the vaccination program rolls out on a much more aggressive basis across the Caribbean. Stable financial markets or stabilizing financial markets should also help in terms of their investment income generated, which should lead to a small revenue bump or hopefully in the coming quarters. So on that basis, we're going to leave Sagicor right now at a neutral rating for the time being. So that's it for this week's edition of the Bourse Report. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website, bourseinvestment.com, where you can get this and all of our other research absolutely free. And of course, catch us today in today's business section of the Trinidad and Tobago Guardian newspaper. See you next week. This has been the Bourse Report.